Hello and welcome to Economic Divide with me, Kavitah Wei. Well, on this week's show, we'll be looking at just how Wall Street traders were once again rocked by yet another financial crisis. When it comes to stocks and shares, there is no greater global name than the famous New York Stock Exchange. Of course, that's located on Wall Street, if you didn't know. Now, it comes down to one thing when it comes to Wall Street and the New York Stock Exchange, and that's the movement of money. That's how people make their money. Some make a lot of money, and some lose a lot of money. But more recently, markets and great legacies of the stock market have been hit by everyday traders using an online chat forum called Reddit. It was used to manipulate stocks and shares, with the most obvious one hitting recent headlines being the Gamestop squeeze, which, as we can see from this chart over here, saw the tiny company's price rise by over 1,700%. Now, the Reddit group was influenced by one particular thread, namely the Wall Street Bets page, which was designed to share tips and information about which shares and stocks to buy, and hence saw the phenomenon blow out of all proportions, as seen in this chart over here, that demonstrates just how fast the group went from under 1 million subscribers to over 5 million almost overnight. Let's therefore take a look at our first report that delves into the events that saw many individuals gain reasonably large sums of money, whilst investors and brokers at Wall Street could only stand by and watch as they lost billions. Back in 2012, a Reddit page was born and was named r/Wall Street Bets, a simple page that openly discussed tips and tricks as to buying and selling shares for the small-time investor. At the time, nobody would have known that one day the chat forum would spark a crisis that would cost Wall Street billions of dollars. In 2021, struggling video game store Gamestop suddenly became the center of attention as users of the Reddit group used the forum to encourage each other to buy stocks of the company, which in turn sent the price of the shares of GameStop through the roof, much to the dismay of the hedge fund investors who had bet against the price rising as the company was slipping into administration.
It's very reminiscent of 1999 and the dot-com era, because does GameStop really have a valuation of $160 a share per stock, or $100? Absolutely not. But, there are people out there that are trading and speculating, and, that's why they're pushing these stocks up higher. And it's kind of, this is a little scary for retail investors who don't have the right knowledge on how to invest, or even, and I don't even call it investing, it's really kind of speculating in these type of stocks.
The sudden surge in price forced institutional investors into buying back stock that they had bet against, obviously at a much higher price, hence leaving them very much out of pocket in a process known in the trade as a short squeeze.
You've had an explosion of the average Joe, so to speak, citizens getting involved in aspects of day trading. And one of the things that was the way that it was presented initially in terms of the GameStop situation in general, of the dramatic rise of the stock value and so forth, there were other companies that were involved in this, were through social media platforms, were people teaming up as a means to then stick it to Wall Street.
Such was the popularity of the Wall Street Bets page that its subscribers shot up from 3 million members in January 2021 to over 8 million in early February, showing that with such large numbers of people all buying the same stock at the same time, the manipulation of the market performed took even the most professional stock traders by surprise. One of the main platforms for buying and selling shares on a small scale was the Robinhood app. However, such was the lobbying pressure on them by the corridors of power in Wall Street and other financial institutions that they were forced to step in, block transactions involving GameStop, which by now had seen prices of shares rise by 140%. I'm pleased to say that joining me in the studio is current affairs and impact analyst Mahan Abedin. Welcome.
Thank you.
As well as Larry Bridwell. He's the professor of international business at Pace University. Okay, welcome to you both. First to you, Professor. We're looking at amateur investors who organized over Reddit and other online forums, targeted shares of companies, including GameStop, that have been short sold by these hedge funds. Now, that is how this is reported, but that may be very hard for the average viewer to actually understand. Can you please explain this to us in layman terms, if you can, please?
Well, the controversy is on the little people in the stock market who they believe that when they couldn't buy GameStop because of Robinhood, that the big hedge funds had stepped on the little people. And this has attracted an enormous media attention. And what had happened is that the big hedge funds had shorted the stock GameStop because they assumed it was going to go down, so they made bets for it to go down. And then there was, and this is an example of social media, there was a chat room that a lot of young people had shopped at GameStop, and so they thought that it had a good future, and they were talking about when they used to visit it and the games they used to buy, etc. So they started buying the stock, and then that created all kinds of problems for those hedge funds that had shorted it. And then Robinhood stopped receiving orders, and the whole thing crashed. And that started the whole process of the Wall Street hurting the average little investor.
All right, obviously still kind of difficult to understand what has happened, but Mohan, this is an unprecedented example based on what we have seen unfold, how the general public has been actually able to shake an establishment and powerful institution to the core. Do you think such examples will be seen again in the future? It's going to happen again? Or will the powers that are within Wall Street and other global stock exchanges actually take action to make sure that repeat doesn't happen?
Well, I think it can happen again. And of course, your guess is quite right. You know, the establishment in Wall Street and its allies across the financial banking sector are very strong. But look, social media is a powerful tool, and the GameStop Reddit saga has demonstrated that. Reddit really is very powerful in terms of how it can manipulate user public opinion, how it can coalesce people who are otherwise very disparate in their thinking and in their attitudes, can bring them together.
Okay, we're going to now take a look at another part of this whole saga that has unfolded in terms of what has been said. The saga got the attention of U.S. lawmakers. Now, mind you, we didn't really hear about the SEC. That's the U.S. Securities and Exchange Commission. That's a large independent agency of the U.S. federal government that was created to follow the stock market crash in the 1920s and to protect investors and the national banking system. But that didn't happen. But we heard from U.S. lawmakers get involved rather pretty quickly, as you're about to see. It did not take long for the saga to turn political when lawmakers from both sides of the spectrum in the U.S. joined the debate, with some saying that by placing restrictions on the buying and selling of stock was unacceptable.
But if removing the revenues that you make from a payment for order flow would cause the removal of free commissions, doesn't that mean that trading on Robinhood isn't actually free to begin with? Because you're just hiding the cost in terms of potentially poor execution or the cost of lost rebates to your customers.
Does Citadel's lobbyist right now been hired to oppose federal proposals to financial transaction tax because it would make high frequency trading less profitable?
I want to know how each of the witnesses here today and the companies they represent contributed to the historic trading events in January.
Americans are far more sophisticated, informed, and capable than folks in DC give them credit for. And it's time our securities laws treat them that way.
Back with me in the studio is Mohan Abedin and Larry Bridwell. Welcome back to you both. Larry, when it comes down to it, one issue is at hand, and that's it, is whether Robinhood actually conspired with the big Wall Street hedge funds, as it was reported, to screw over the everyday folks who are suddenly striking it rich with investments like GameStop.
Well, this is almost like a courtroom drama because Robinhood's a relatively new company. They had not anticipated. This is what the argument they're making. And all of a sudden they get all these orders and they didn't have the capital. So it took them a couple of days to get the capital. Now the CEO of Robinhood saying, I'm just an innocent victim of circumstances. And then other people are saying, well, you have this linkage with the hedge funds. So I think we're going to have kind of a courtroom type hearing to find out what the real story is. But there is speculation that Robinhood had colluded with the hedge funds, but the CEO denies this. So we'll have to find out what the investigations find out.
Yeah, indeed. Well, hopefully there's going to be some conclusion to that.
Yeah.
Mohan, it's been known that Wall Street, which is comprised of these hedge funds and money managers, they don't really care about the everyday people, do they, in terms of the type of trading they do? I mean, we could take a look at the 2008 financial crisis, how that unfolded. Why doesn't the Fed or the law reel in these shady practices instead of just fining them? It seems like they're good at fining them. They pay the fine, these whatever entities you want to call them, and then they move on with business as usual.
But fining is the default punishment for these type of crimes in the United States. And what tends to happen, of course, is that the American regulators, they impose very, very hefty fines on international transgressors. We've seen that on the fines they impose on banks, for instance, who've assisted countries or individuals under sanction to evade sanctions. The fines can be astronomical then, really crippling. But in terms of the actual US market, no, the fines are not very harsh. And this goes, I mean, I think your question goes into the heart of the matter. If these are criminal acts, I think everybody agrees that they are, and they can be very damaging. Why aren't people going to jail for it?
Indeed. Yeah, I agree with that. Well, now is a good time to take a look at some of the protests that actually took place on what many see as Wall Street watching out for number one, namely themselves, while the average Joe is the one that suffers the losses.
Yeah, I mean, you know, they're called Robinhood, right? So, yeah, it's kind of ironic that they're helping the big guys.
It's pretty crazy because I look at the whole GameStop thing with the stocks as a revenge of the nerds kind of attack on the big boys in Wall Street and against a lot of the big trading firms that are out there.
I think the little man finally got an ounce of what they deserve, and it was the assholes in there that took it from them. They delisted it. Ameritrade, Robinhood, Webull, they all can't stand to have the little guy win, and that pissed me off, and that's why it's the suits, it's buy Bitcoin, and it's always been that for decades. It shows you that you can be your own bank, you can do your own transactions, verifiable, permissionless, decentralized. It's the future of commerce, and the assholes in there, they haven't caught on to it yet, but Grayscale, Michael Saylor of MicroStrategy, they're starting to dip their feet in, and this is the future of finance right here.
Welcome back to Economic Divide with me, Kavitah Wai. It's time now to take a look at some of the other economic headlines hitting the front pages in our Info News section. Our first story takes us to the aviation industry, where the effect of the COVID-19 pandemic is still taking its toll. Orders for new aircraft all but dried up in January, as just 4 commercial aircraft orders were placed, down from some 296 that were placed back in January of 2020. Adding insult to injury, all 4 planes ordered were freight types, and that shows just how bad the industry is suffering. But it seems that each week there is no escaping the fortunes of the cryptocurrency Bitcoin, which has once again smashed records by surpassing the $58,000 mark. As of the recording of this show, the value has now risen more than 90% since the start of January, pushing its total market value to above $1 trillion. Mind you, again, as of the recording of this show, prices have actually come down. There's been about a 20% drop. Next story, the Institute of International Finance has estimated that the COVID-19 outbreak added to global debt, with the figure soaring to an all-time high of $281 trillion. The debt to GDP ratio increased by 35 percentage points to 356%. Estimates suggest that another $10 trillion will be added to this figure by the end of the year. And finally, ties between the EU and Russia are hitting lows on both a political and an economic level, with the EU's largest powerhouse, Germany, reporting that trade is down with Russia. Business is down 22% year on year to $44.9 billion, with German exports to Russia down 13.1% and Russian imports to Germany down 29.9%. Okay, make sure to watch our upcoming episode of Economic Divide where we cover the EU-Russia relationship in more detail. Well, it's time now to take a look at our final report of the day as we examine how traders are looking at alternative forms of investment outside the normal realms of the stock market.
The 1980s brought a period of global capitalism that saw the birth of the get-rich-quick ideology, with bankers, investors, realtors, and traders making the most of the boom days. But this was not limited to and restricted to just the personal working for the big banks and stock exchanges around the world. Everyday people also wanted to make money, and so the birth of home enterprise was witnessed, with people starting to invest in small ventures ranging from buying and selling vehicles, cosmetics, and a host of other things. With the world able to now obtain information in real time, much like the decline of travel agencies as people book their holidays at home online, the Gamestop saga could also be the birth of a decline in stock exchanges, with everyone now aware of just how easy it is to invest their money.
I think certainly it appears that, the regulators are certainly taking a look, as they've said publicly, on, the recent market action. It's hard to say whether additional regulations would be required. Certainly, again, from my vantage point, really it's about making sure that the playing field is level.
Welcome back to the studio, current affairs and impact analyst Mohan Abedin and Larry Bridwell, professor of international business at Pace University. Larry, on a deeper level, doesn't this whole affair show how manipulation happens on Wall Street? You're looking at manipulation that is pretty deep, from insider trading, artificial price inflation, just to name a couple. How deep is this manipulation that's happening on Wall Street, do you think?
This is a major issue, and it's especially accentuated by this phenomenon called private equity. And the 500 companies went from being public, where you buy and sell the stocks, to being private, so it's no longer in the stock market. And of those 500 companies, over a 20-year period, 20% of them went bankrupt. And in the public companies, it was only 2%. So these private equity firms, and part of the stock market manipulation, they take the cash out of the companies, and that makes them weaker. And there are some prominent examples of this. There was this famous toy company for children in the United States called Toys R Us. They were taken private, went bankrupt. Two of the largest retailers in the history of the United States, called Sears and Kmart, also went bankrupt when they were taken private. And even the Hertz Rent-A-Car went into bankruptcy. So this is one of the reasons why Senator Elizabeth Warren is pushing this Accountable Capitalism Act, because if you had to, for a big company, you have to be $1 billion, not a little company, a big company. If you have 40% of the board of directors be employees, then you can fight that.
Okay, I want to thank Larry Bridwell there. He's a professor of international business at Pace University. Mohan, final question here. We've seen how the Reddit phenomenon has caused everyday people to buy and sell stocks.
Yeah.
How do you think people are faring when it comes to alternative markets? We're seeing, for example, what has happened in the cryptocurrency market with, let's say, Bitcoin and the likes. Prices have soared.
Yeah.
Do you think similar examples are out there as we have witnessed with the Reddit saga?
Well, events like this can create the illusion that this can gain real traction. My personal view is that this is still an outlier. It's a fringe event. And yes, there are equivalents of it in all walks of life, even in politics. Look, the New Zealand, the Australian terrorist who killed all those people in New Zealand back in 2019, he was the member of this alternative chatting forum called Chan, which is quite similar to Reddit, but it has a a political content, whereas Reddit is about social stuff, and it's kind of a different category. But yet, examples are out there where forums like Reddit or its equivalent in the political world can manipulate public opinion on certain issues and then create a very spectacular event. But it's still an outlier. It's not affecting public opinion writ large.
Okay, thank you very much for that. We appreciate it. Mohan Abedin, Current Affairs and Impact analyst, many thanks for your thoughts. Now, you also like to thank Larry Bridwell also for being with us. Now, our other guest in the program, the one we featured in our reports, he gave a really good example of how Wall Street manipulates the average person. Let's hear him as to how that happens in his own words.
One other example of how this actually looks structurally, take the case of BlackRock Incorporated, right? The largest asset manager that, together with the other of the big three, State Street and Vanguard, together they have about $18 trillion of assets under their management. I think that's larger than the nation of China itself, the second largest economy on the planet. And the way that BlackRock sort of rose to its prominence was through this, what was called Aladdin. That stands for Asset Liability, Debt, and Derivative Investment Network. That's about 6,000 super high-tech computers, all pooled together with a team of about 2,000 IT specialists, mathematicians. It was actually, I believe, a joint venture with Google to be able to run these, for the asset managers, run these kind of passive management versus these, having traders that are involved in sort of active trading processes. Instead, you let the computers run it, and it's a much more lucrative system for the likes of BlackRock. I guarantee those types of systems would be integrated with social media, such that these kind of operations that you're seeing in the case of GameStop and the Robinhood controversy in general, I guarantee that that just gives an indication of how things are lined up at Wall Street, which is designed to fleece your everyday citizen, your common investor. That's how the mafia works, and certainly that's how these guys operate as well.
So this is a bit more complicated and controlling than what many perceive the stock market to be. But ultimately, the market manipulation comes in many different forms that blurs the lines of whether the investments in a stock is based on real facts or not. In our final segment, we give you 1,000 words. The world we live in is becoming smaller and is operating ever more on a real-time basis, with the world able to connect and trade at the click of a button from the comfort of an armchair at home. Yet for decades, and even maybe centuries, certain niche markets were dominated by the powerhouses in the corridors of stock exchanges around the world. Yet the Reddit movement, which saw everyday traders rock the world of the hedge fund managers and everyday bankers, demonstrated that the Wolf of Wall Street has now turned into a pack. Yet the pack has changed from the elite traders into everyday people, something that cost billions and put many noses out of joint. Already laws and measures are being taken to avoid a repeat of the GameStop saga. But will manipulating the law to favor the stock markets simply motivate the many to find new and more adventurous ways to break the system? Only time will tell. That's about all the time we have on this week's episode. So on behalf of myself, Kavitha Wei, and the whole team here on Economic Divide, many thanks for watching. Stay safe, and we'll see you again next time.